Okay, let us understand certain explanations which are given to the definition of actual cost. These explanations are basically meant to cover certain specific situations, okay, and basically provide guidance on what do you mean by actual cost. Let's see the first one. The portion highlighted in red is basically representative of the heading, and the balance is the text. Let's read the first one. Asset used in the business after it ceases to be used for scientific research. Now, if you would, as you would, sorry, not if you would, as you would see in the subsequent videos, you will see that in case of assets which are used for scientific research, the amount of depreciation and the conditions relating thereto are a bit different from the normal one. In certain cases, you even get 100% deduction for all your capital expenditure in year one. So let's say, suppose I was using a plant and machinery for scientific research purpose. The research got over, but that plant and machinery can also be used for my normal business. Okay, let me show this to you pictorially. I bought an asset on say 1/1/2011, plant and machinery. I used it for scientific research. Till 31/12/2011. Okay, and let's say, and I mean whatever I am taking is only illustrative. You'll have to see section 35. Suppose I was allowed 100% depreciation on plant and machinery under section 35. So I got it for 100,000 and I got depreciation of 100,000 on this. So my written down value became 0. Actual cost, depreciation. Okay. Now what I decided, I stopped my research work, let's say on 31/3/2012, and I started using this plant and machinery for normal business. People are very smart. What they will say is, I'm transferring this from this department to the other at 1 lakh. But will the depreciation be allowed on 1 lakh? The answer is no. Let's read the section once again. Okay. The section says actual cost of the asset will be reduced by the amount of deduction under section 35(1). So in my example, if I got a deduction, you can take it as deduction also or depreciation, whatever you want to put in. It's actually a deduction, not depreciation. Was 1 lakh, then what did I get? I get 100 lakh minus 100,000 minus 100,000. So my actual cost will be 0. This is what explanation 1 provides. Now let's move on to explanation 2. Asset acquired by way of gift or inheritance. Gift, something which is made by one person to the other out of natural love and affection. And second is inheritance. If there was a person X who expired, and suppose he bequeathed, he left behind, let's say, a motor car to his son Y. Okay, so what will be the actual cost in the hands of Y of this motor car? That will be actual cost to the previous owner. Let's say the car was 100 rupees. So 100 less depreciation allowed to the previous owner. If suppose X had claimed a depreciation of 50 on this car before it was passed on to Y, it reduced by 50. So the actual cost will be 50. And this explanation is applicable in case of gift or inheritance. Third, second-hand assets. Okay. Let me explain to you what this means and why this is important. Let's say we had X and Y. Both were engaged in carrying profits and gains of business and profession. And both these companies were owned by a person, let's say A. Now X got this asset, let's say for 100, actual cost less depreciation was, let's say, 80, and the written down value was 20. Now let's say X had business, or let's say capital loss of 50. So what X did was, X sold this plant and machinery to Y for 70 rupees. Y got it for 70, so the actual cost was 70. And whatever gain was made by X, how much was the gain? 20 was the written down value, 70 was the cost. So the gain was 70 minus 20 is equal to 50. What A did was, A set off this loss against this. These you will understand in detail when we kind of do further chapters on set off and carry forward. So he did not pay any tax, and Y said, hey, look, I bought this for 70, give me the depreciation as on 70 rupees. Well, this is not happening. Why? Because of this particular explanation. Where a second-hand asset is acquired by the assessee. Who's the assessee in this case? Y. That was used by the previous owner for the purpose of his business. Now please note, it should be used by the previous owner for the purpose of his business, which is X. If it is not used for business, then this is not applicable. And the AO is satisfied that the main purpose of transfer was reduction of tax liability. So in my example that I took, what happened? Let's see. X basically had a profit of 50 rupees, right? Which he set it off against this, and the tax liability was 0. While Y said, I'll get depreciation on 70. So he got a benefit. This is what is proposed to be prevented by this explanation. So the actual cost to the assessee shall be the amount as the AO may determine, having regard to all circumstances of the case with the previous approval of the Joint Commissioner. So what happens here? Basically, he takes the approval from the Joint Commissioner and determine an amount based on the facts and the circumstances of a particular case.